Hello everyone, this is Evan here from the Trade Risk on Wednesday, July 13th with a midweek market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off with some individual names. Now we'll jump right into things today. S&P 500, the SPY ETF, closed flat on the day, and that's not such a bad thing just given how much ground that we've covered in such short order here. So let's take a look at where we started this week first. That was this bar right here, this candle. This was the day, this was Monday. This is where we gapped up just a little bit to open the day, and this is where we officially sort of made new all-time highs. We took out the previous 2015 S&P 500 highs, and we closed at new highs. So this was the candle that finally got us there. Tuesday we saw follow through to the upside, and then today, of course, just as we mentioned, was a sideways sort of digestion type of day. Now, if we go to the weekly time frame, you can see this breakout is clearly in motion. We discussed this in last week's video, basically saying last week was the breakout week, and so far we're seeing follow through to the upside. We finally got the official sort of new high there. So for those last minute sort of confirmation watchers, you're getting it this week. Arguably you'd still want to see us close strong on the week. I get all that, but you have to be sort of encouraged here, especially if you're a bull. If you're a bear, you'd have to be at least I would imagine you'd have to be somewhat concerned here. If you're short the S&P, or if you have a short thesis, you have to be concerned about this. In my opinion, all the way back down to 210, really, if that's the line in the sand at this point. If we start to roll over and fall back into this old range, which is absolutely is a possibility, all breakouts have the chance of failing. That's when the more neutral and maybe even aggressively bearish at that point thesis could come back into play if we really did see this big false breakout happen. But for now, that's a low probability event in my opinion until we at least see us start to get weak and break below 210. I think all dips should be looked at as an opportunity, not a risk, to try and position long, to try and position for an emerging trend here as the S&P 500 makes new all-time highs. Going back to the daily chart, clearly, we've covered a lot of ground like we mentioned, but as I wrote in a post on Monday, you can check it out on the Trade Risk homepage. We're in that initial breakout momentum phase. This is the fastest type. Generally, the start of a new trend and the end of a new trend are historically your fastest, most aggressive, climbs in price action. And we're absolutely seeing that right now, no question. So we've got that competing forces where we're overbought, yes, we're stretched, yes, but where the market is undergoing a real, sudden shift here on these longer term time frames, and that's why we're staying so bid up at these levels. And I would suspect that we are going to continue to grind higher at those overbought levels and continue to sort of push those limits. And again, I don't see the just slam down hard retrace as a high probability event. It's certainly a risk, there always is, but to me, it's just not worth playing for. So that's the way I'm looking at it. Very bullish on this market. We've been certainly increasingly so, particularly last week, as we really saw the resilience here. And there's been a few spots along the way to kind of catch on and build exposure in this rally. I think we've done a good job at sort of pointing those out in the past couple of videos and posts that we've put out. So definitely check those out if you want to look back and see the thought process sort of progress. For us, we came into the week aggressively long, basically 100% exposed, and we've basically been trimming down that exposure throughout this week, taking profits, and we're probably around 50 or so percent invested at this point. But like I say, any type of pullback, any type of weakness, another day of digestion, I'm looking at opportunities to try and just continue to rotate into quality names that are moving higher and continue to work with this strength here in the market. So that's sort of the read on the S&P 500 there. IWM Very similar. We've saw just a tremendous amount of strength here. Weekly chart, you can see we talked about this 120 level. This is where we got to today, and we pulled off. And this is going to be a difficult level. There's a lot of previous sort of supply at this level. We failed here multiple times. This has acted as resistance. So we'll have to see if we cut right through this. That would be extremely bullish. If we do stumble here and let some of these moving averages catch up and some of this digestion kind of work itself out, that's not a bad thing either. So we'll just keep an eye on 120. That's again, an important level in the past. And the Qs have now clearly broken out from this pattern here. We took out the previous highs in June. If you go to the weekly chart, you can see still in a range, larger context-wise, 115 or so were the highs from 2015. So we still have some work to do. It still could be messy, but for now, it's a step in the right direction. We have broken out in its own sort of respect in a smaller time frame pattern, not such a grand scale breakout like the S&P 500, but it's still progress. So it is encouraging there on the Qs. IWM, S&P all sort of working themselves higher. Remember, we do have earnings coming out. We're basically now kicking off and in the midst of earnings season. Banks will be reporting soon, and everything else to follow. So certainly can get interesting here as those numbers start to come through and the market starts pricing those in. It's going to be interesting to see if how markets hold up, if it's an excuse to rally us higher, or maybe that's some type of catalyst to turn this big breakout into some type of failure. We'll have to just wait and see. So let's look at some other markets now. TLT, we'll go there, recovering a little bit today. I mean, nicely today, back into the gap here. We had this little kind of an island top here, but you can see we're already quickly retracing that. Dip buyers still interested in TLT, and this trend still looks real strong to me. You can see weekly chart is still overextended, yes, but again in one of those high momentum phases where it just, to me, would not want to be short this at this point. Not to say it can't work, just not my style. Still looks good. 8 and 20, all very aggressively sloping higher. So TLT still looks strong, and we'll have to see. You got a pivot low to work against now, about 139.50. Yesterday's lows, certainly now a good line in the sand to trade against or potentially use as a short signal if we can take that out. Let's look at gold next, which had a nice recovery day as well. Yesterday got hit pretty hard. Again, fast moving averages all sloping higher. Momentum is here, been in here for gold for quite some time. Weekly chart still in motion. I still like it. I mean, it's clearly pulling back. Maybe this offers an opportunity here if it can continue to stabilize, hold these moving averages, and then push higher again. I do like gold. Silver, similar to comments, had a nice day today, holding up at the highs here. So silver, again, bullish momentum coming into a lot of previous supply from 2013, 2014. See how it reacts to that. Extended on the weekly, but again, high momentum. It's pushing higher, so I like silver. Tough to chase, but would not want to be short that. And now let's look at USO, which got hit pretty good today, 4%. Basically gave everything back from yesterday, almost everything. We had a 5% rally yesterday. We lost 4% today. So you can see a lot of volatility in USO right now. Oil, a lot of indecision here. The 8 and 20 already have curled over. So we'll have to see if we can try and stabilize here. It didn't, it got a small bounce off of yesterday's lows effectively. But let's see if USO can stabilize. It's in, this kind of rolling downtrend now. Weekly chart is concerning. Monthly chart is concerning. So let's see how this all shakes out. A little too messy, a little too back and forth for my liking. Not clean enough to swing this, but if I had to pick a direction, I wouldn't mind being short this, but you'd have to give it a pretty wide stop. That's the way I would look at it. But no position for me there. UNG also been struggling as of late, but still just pulling back. Still pretty healthy action, all things considered. We had this breakout in June. Took us quite a bit higher here, 20-30% run in UNG or whatever this, whatever this leg was. And now we're coming back to this 20 period. This looks like a pretty clear line in the sand here, this $7.90 level. I think as long as you're basing above there, then I still think bulls are in control here. Weekly chart, much different landscape, right? This has been beaten down horrendously over the past several years, but you can see it finally got that 820 crossover on the weekly. It's trying to hang in here. Just might need a little more time to digest sideways before it really kind of, shapes itself up. Now let's look at some of the sector analysis. I mean, there's a lot that's been working, and that's what, part of the reason why I'm so constructive on this market is because there have been a lot of sectors just really participating and pulling their own weight. Semiconductors, though, probably one that is shining pretty bright right now as it pushes to all-time highs. Almost got it today, but not quite. But just a lot of strength here, especially in these individual names under the hood. Semiconductors have been a great trade recently. XLI, the industrials, have now been performing pretty well, taking out key 5750 level. They're extending to new all-time highs. Let's see if they ended up getting it today. Not quite, but almost there. Actually, yeah, they did get new highs today in XLI. So that is very encouraging. XLY, discretionary sector, not at all-time highs just yet, but pretty close to it. And many others are all doing well. Those are probably just the three standouts right now. Energy, still, on a relative basis, maybe slowing down a little bit, but I really like this pattern. This has potential to sort of emerge here. Obviously got hit today with that 4% fallout in oil, but I still like the pattern, but maybe a little sluggish relative. IBB, still, this one got hit pretty good today, the biotech. So some of the slightly laggards here. XLU, again, all very healthy, so it's just a matter of context, but again, on a relative basis. Financials also coming back pretty sharp recently. Weekly chart still would like to see us get above, this trend line and then take out this previous high here, this pivot above 24 bucks. And I think if you get financials back into play, that's going to be another sort of boost here. And certainly keep an eye out as these earnings start to roll in, I believe, later this week. So that'll be an interesting reaction to see what the market thinks about that. Now, real quick, looking at a few individual names. Amazon, this one, we were in this trade. We are now no longer in the trade. We got involved in it here on this little breakout, and it was a nice quick trade for us. We did take some profits up above 750, and then we got stopped out of the rest yesterday around 743 or so. Great here, particularly if we can hold above 730 in these fast-moving averages. For us, this was more of a portfolio decision. This was our first kind of exposure to trim because we had so much other long exposure on. This was more of the sensitive kind of trade that we had on that we wanted to get rid of. So just because we're out of it doesn't mean this isn't, still a good-looking, bullish leading stock. And I'm definitely interested in revisiting this if there's an opportunity. In the near future. Netflix, this is an interesting one as well. We've discussed this tightening kind of triangle that's going on here. Unfortunately, this is probably going to be a catalyst for earnings that's going to really drive us out of here one way or the other. But just keep an eye on this kind of tight coiling pattern there in Netflix. Alibaba, this one also just has a lot of trouble just getting into a clean trending state. It did break above $80, pulled back 1.5% today, so underperforming a bit today. Weekly chart, you can see it is still breaking above this, slightly subjectively drawn trend line here, but it looks good, but we really need to see that continuation follow through and really just leave behind this supply here. It just still looks like it's kind of trapped a little bit with some wanting to just base out in this 74 to 82 range. And then finally Tesla, this one again is a very headline driven one, and to me just still so many headaches here. I don't like this. I get a lot of questions on Tesla and thoughts on it, but for me it's so sideways. It's just choppy. Intraday, probably a lot of opportunity. Swing basis, though, there's just way too much indecision and headline-driven, stock right now that not something I'd want to be involved in on a swing basis. Weekly time frame, you can see this is the bigger range that it's in. It's just dead in the center of it. I don't see a lot of opportunity there right now. So that's it for today's video. Hope this video helped, and you guys are having a great day. Again, if you haven't subscribed to the channel, please do so. Bottom right hand corner keeps you up to date with all the latest videos that we put out. As always, thank you for watching, and I will catch you next time.